U.S. Treasuries took down.
Listen up, Rebels. Rebel Leader here, and today I want to talk about the Suez Canal and how it's been affecting the entire stock market, the world economy, and how you can best prepare yourself to save your stock portfolio and prevent massive downside risk. For those who don't know, the Suez Canal is in Egypt, and a giant container ship is blocking the entire passageway. And this is the straw that breaks the camel's back for trade in the Middle East and also the entire Eastern Hemisphere, really. The longer this goes on, the more damage is going to be done. Economists estimate between $6 billion and $10 billion per week is going to be lost in global trade due to this blockage. So in short, they're trying to refloat the ship and then try to push it away, but the problem is that the bow of the ship is actually stuck in sandy clay. That's as far as we'll go into the science of it, but we're here to talk about the implications on your stock portfolio. Last week we saw a massive decline in a lot of stocks, and this happens due to fear of uncertainty. Anytime there's any uncertainty in the stock market, we see prices drop. And sometimes this is why we think long term, because short term things like these are possible, and not even the CEOs of these big companies can predict accidents like these. This also, as you as an investor, kind of leaves things a little out of your control, and that is why even if you choose the right stock, things like these can still happen. But long term, it doesn't really matter. It's just going to cost companies a lot of money in the short term, so people get a little fearful, a little uncertain, and they'll try to move investments into different industries to try to safeguard it. This is why right now, if due to recent volatility of the last few weeks, if you're unsure of what stocks you want to jump into, if now is even a good time, what I would recommend is you to invest in ETFs right now. We talked before about an ETF is basically just a basket of many different stocks chosen by different companies or different fund managers, and you basically pay a small fee to the fund manager to take care of the portfolio for you, and it's very hands-off, passive approach to growing your wealth. It's also very safe, and there's a very low downside risk. You see companies losing anywhere from 10% over a week. You're not going to see that type of volatility in an ETF. You might only see a downside of 1 to 2%. But again, you also don't get the upside growth that you do by individual stock picking, because in an ETF, it'll grow much slower, on average around 10% a year. So these are some of the best ETFs that you can try to look at, and a lot of them you can look at what the company is doing. The Vanguard ETF, been around for a long time. You can check out the Invesco Triple Q Trust. You have a few ARK ETFs to choose from. Or if you want to go even simpler, you can just invest in the SPDR S&P 500 ETF or the Dow Jones ETF. But you have to understand that is just tracking just those indexes. But when choosing an ETF, you can actually tailor it. A lot of those companies that I mentioned, Invesco, ARK, and Vanguard, there are a few options of ETFs you can choose from based on your preferences. If you want to enter the tech sector, if you want to enter low cap growth companies, high growth, if you want more high yield dividend plays, there's all these types of options you can choose from when choosing an ETF from these companies, because it's still very diversified, but they kind of allow you to attack a certain sector or tailor your portfolio to what you want to do with it. And the beauty of ETFs is that these fund managers and even the S&P 500 and the Dow Jones, they're constantly being replaced if a stock underperforms. If a stock does really good, they'll add more of it, and they'll kind of automatically rebalance your portfolio over time. Now, when a company joins S&P 500, it's only a few times a year that they take new inductees. So you have to kind of keep an eye on what's being added, because you should know, again, what you own. And just because you invest into an ETF doesn't mean that it frees you from any responsibility. So in short, don't worry about this recent drop due to the Suez Canal blockage. If anything, now is a great time to buy. Stocks are on sale. So stay frosty, Rebels. Rebel Leader, over and out.